Here is the derecognition of a financial asset. Derecognition means the removal of a previously recognized financial asset or financial liability from an entity's statement of financial position. An entity shall derecognize a financial asset when, and only when, the contractual rights to the cash flows from the financial asset expire, or it transfers the financial asset. Let's look at how a financial asset is transferred. An entity transfers a financial asset if and only if either transfers the contractual rights to receive the cash flows of the financial asset, or retains the contractual rights to receive the cash flows of the financial asset but assumes a contractual obligation to pay the cash flows to one or more recipients in arrangement. This occurs, for example, if the entity is a trust. I mean this entity acts on behalf of a person or a business, and issues to investors beneficial interests in the underlying financial assets that it owns and provides servicing of those financial assets. Now, the rest would be quite complicated. But I would like to present a flowchart in order to simplify the subject and make the life easier. The following flowchart illustrates the evaluation of whether, and to what extent, a financial asset is derecognized. The first thing we need to do is to consolidate all subsidiaries, if there is any. An entity consolidates all subsidiaries in accordance with IFRS 10, Consolidated Financial Statements. Then we must determine whether the derecognition principles below are applied to a part, or all of an asset. Only a part of a financial asset is derecognized, if the part meets one of the three conditions. One of these conditions is if the part comprises only specifically identified cash flows from a financial asset. For example, when an entity enters into an interest rate strip whereby the counterparty obtains the right to the interest cash flows, but not the principal cash flows from a debt instrument. Or, if the part comprises only a fully proportionate share of the cash flows from a financial asset. For example, when an entity enters into an arrangement whereby the counterparty obtains the rights to a 90% share of all cash flows of a debt instrument. Or, the part comprises only a fully proportionate share of specifically identified cash flows from a financial asset. For example, when an entity enters into an arrangement whereby the counterparty obtains the rights to a 90% share of interest cash flows from a financial asset. In all other cases, a financial asset is derecognized entirely. Okay, after two steps above, we need to answer some questions. And according to the answers, we will derecognize the financial asset or not. In order to make it simple, I will use some signs. Tick means yes. Cross means no. R means recognition. And D means derecognition. Yes. Our first question is, have the rights of the cash flows from the assets expired? You remember this. The main derecognition conditions. This question is referring the first item. The contractual rights to the cash flows from the financial asset expire. If the answer is yes, then we derecognize the financial asset. If the answer is no, we move to the next question. The next question is, has the entity transferred its rights to receive the cash flows from the asset? You may also remember this. If the answer is yes, we skip to the next question and directly teleport to the question. Has the entity transferred substantially all risks and rewards? If the answer is no, we move to the next question. Following question is, has the entity assumed an obligation to pay the cash flows from the asset that meets criterias? Which is the second item of transferring the financial assets, which we have already seen. When an entity retains the contractual rights to receive the cash flows of financial asset, but assumes a contractual obligation to pay those cash flows to one or more entities, the entity treats the transaction as a transfer of a financial asset. if, and only if, all of the following conditions are met. If the entity has no obligation to pay amounts to the eventual recipients, unless it collects equivalent amount from the original asset. If the entity is prohibited by the terms of the transfer contract from selling or pledging the original asset other than a security to the eventual recipients, for the obligation to pay them cash flows. And, if the entity has no obligation to remit any cash flows it collects on behalf of the eventual recipients, without material delay. In addition, the entity is not entitled to reinvest such cash flows, except for investments in cash or cash equivalents. If the answer is no, we continue to recognize the asset. But if the answer is yes, we ask a new more question. Has the entity transferred substantially all risks and rewards? If the entity transfers substantially all the risk and rewards of ownership of the financial asset, the entity shall derecognize the financial asset and recognize separately as assets or liabilities any rights and obligations created or retained in the transfer. If yes, we derecognize. If no, then to the next question. Has the entity retained substantially all risks and rewards? If the entity retains substantially all the risks and rewards of ownership of the financial asset, the entity shall continue to recognize the financial assets. As we clearly understood from the explanation, answer yes results to continue recognizing. Otherwise we go to the final question. Has the entity retained control of the asset? If the entity neither transfers nor retains substantially all the risks and rewards of ownership of the financial asset, the entity shall determine whether it has retained control of the asset. In this case, if the entity has not retained control, it shall derecognize the financial asset and recognize separately as assets of liabilities any rights and obligations created or retained in the transfer. If the entity has retained control, it shall continue to recognize the financial asset to the extent of its continuing involvement in the financial asset. So, if the answer is no, we derecognize. But if the answer is yes, we continue to recognize the asset to the extent of the entity's continuing involvement. Cool. This is the end of the flowchart. I hope you gained some benefit. I strongly recommend you to watch it again to consolidate what you have learned.